You know what's been making headlines lately? Gold.
Yeah.
Seriously.
Oh, absolutely. Hard to miss.
Yeah, while stocks have been a bit shaky, bonds unpredictable, and the dollar's been softening, gold prices have just absolutely exploded.
Record highs. We're talking above $3,500 an ounce recently. It's quite the surge.
It really is. It makes you wonder, what is behind this sudden, golden glow?
It's a fascinating situation. I mean, typically when there's economic uncertainty, investors look for these so-called safe haven assets.
Right, safe havens.
But what's interesting now is that gold seems to be grabbing a lot of attention as maybe the primary safe haven in this specific climate.
Exactly. So for this deep dive, we've gathered some recent reports trying to understand this gold market surge and, what it actually means. Our goal is pretty simple. Break down why gold is rallying, figure out who exactly is buying it, and ultimately what the real-world consequences are for you, the listener.
Sort of cut through all the market noise.
Let's do that. Okay, so the first big idea that keeps popping up is this concept of a flight to safety. What does that really mean right now?
Well, historically, gold's always been seen as like a place to park your money when other investments seem risky.
A financial shelter.
Yeah, exactly. A shelter in a storm.
Right.
What's particularly noteworthy now, I think, is just the sheer number of anxieties that seem to be fueling this move towards gold.
Right. The reports we looked at mention a whole range of worries. Tariffs, those ongoing trade disputes.
Still rumbling on.
The persistent fear of a recession, which never quite seems to go away, and of course the ever-present issue of inflation.
It really feels like a confluence of factors, doesn't it? Pushing people towards something they perceive as, stable.
Definitely. And it's important to consider the perspective of those individuals, often called gold bugs, right?
Ah, yes, the gold bugs, people who tend to have a, let's say, healthy distrust of traditional financial institutions.
Governments, central banks.
Exactly. For them, owning physical gold isn't just an investment, it's a way to maintain direct control over their wealth completely outside those systems.
And that viewpoint, it definitely contributes to the consistent demand we're seeing.
No doubt.
Which, leads to something I found genuinely surprising in the reports. Costco.
Costco,
Yeah.
yes. The big box retailer.
Where many of us are buying, bulk paper towels and maybe a giant pizza. Apparently, now a significant player in the gold market.
It might seem unexpected, I grant you, but if you think about Costco's whole business model, it actually starts to make a bit more sense.
How so?
Well, the reports really highlight the trust people place in that Costco brand. They're known for offering value, right? Low overheads, low markups.
Yeah.
And that perception seems to extend to their gold. They often sell gold bars and coins with really slim markups, sometimes just a few percentage points above the spot price.
The spot price being...
Oh, right. Sorry. Spot price is basically the current market price for buying or selling gold for immediate delivery, like right now.
Okay, so Costco's price is close to that baseline.
Yeah.
That's wild to think about. One report even quoted a buyer calling Costco the gateway drug to gold investing.
That's a great line. It captures it perfectly. You go in for a rotisserie chicken, maybe you walk out with a 1-ounce gold bar.
It's quite the image.
And what's also interesting is how some savvy buyers are leveraging Costco's system. The membership rewards, the credit card points.
The executive membership cashback.
Precisely. Because they get a small percentage back on purchases, they can effectively lower the net cost of buying that gold. Potentially even, seeing a tiny gain just by converting dollars to gold that way.
Like a little arbitrage almost.
Sort of. Of course, the reports also mention the practical side. Keeping the gold in stock is a challenge for Costco, and shipping times can sometimes be an issue.
Right, logistics. Okay, so gold prices are up, people are buying, surprisingly, at Costco. But let's zoom out a bit. What's driving this surge from a wider market perspective?
Yeah.
We know the U.S. dollar has been weakening. That plays a role, doesn't it?
It does, correct. Generally speaking, a weaker U.S. dollar makes assets priced in dollars, and gold is typically priced in dollars more attractive to investors holding other currencies.
Because it's cheaper for them to buy.
Exactly. So that increased demand can push the price up. But the reports also emphasize another really significant factor. Central banks.
Okay, what are they doing?
They themselves are increasingly diversifying their reserves. They're moving away from holding primarily currencies like the dollar or euro and allocating more towards physical gold.
Wow. So large-scale institutional buying.
Yes. And that kind of buying by central banks around the world has a considerable impact on overall demand and, consequently, the price. It's a big piece of the puzzle.
So it's not just, individuals feeling anxious and heading for gold. Major global financial institutions are making similar moves. That definitely adds another layer.
It really does.
Now, we touched on this earlier, but how does this gold rally actually affect everyday people, beyond just those making investments?
Right, because it's not just an abstract number on a screen. This is where the implications become very, very real. Gold isn't just an investment asset. It's a raw material.
Used in electronics, dentistry.
And most visibly, perhaps, in jewelry. The reports give a really specific example. A jewelry maker.
Okay.
They're anticipating something like a 10% increase in the cost of engagement rings.
10%? Wow.
And that's not just because the price of gold itself is higher. It's being compounded by new tariffs on gemstones as well.
So it's a double whammy.
Exactly. So you can see how these larger economic shifts, the gold price, trade policies, they eventually trickle down and impact the prices you, the consumer, pay for certain goods.
So that symbol of commitment, the engagement ring, might get noticeably more expensive because of these global market forces.
That's the connection, yeah.
Speaking of individual buyers, one of the reports featured an anonymous person who invested quite a bit, $30,000 in gold this year, through Costco, actually.
That story stood out.
What struck you most about their reasons?
Well, their motivation really seemed to crystallize the underlying sentiment we've been discussing. This person explicitly said their decision to buy gold this year, they hadn't owned it before, was driven by growing apprehension, fear, really.
About
the unpredictable political and economic landscape, just uncertainty about the future. The current climate pushed them towards what they perceive as a more secure way to store value.
And there was that really powerful quote from them, wasn't there? Something about the gold price being a measuring stick.
Yes. They viewed the rising gold price as, and I think I'm quoting right, a measuring stick for how bad things are going to get.
That's pretty stark.
It is. It really underscores how some people see gold not just as an investment, maybe not even primarily as an investment, but as an indicator, a barometer of broader economic and political instability.
A sign of the times, almost.
You could say that. Now, going back to the Costco phenomenon for a second, the reports mentioned an interesting quirk in their pricing relative to that spot price we talked about.
The lag.
The lag, exactly. Could you elaborate on that?
Yeah, it seems like Costco's price for gold sometimes doesn't update quite as fast as the real-time spot price. It doesn't fluctuate minute by minute like the market does.
Okay.
So for people who are watching the market really closely, there could be these brief windows where Costco's price maybe hasn't caught up to a recent jump in gold's value.
I see.
And this slight delay, combined with those credit card rewards or the executive membership cashback, well, it leads to discussions among these Costco gold fans, apparently on places like Reddit.
Talking about what? How to game it?
Sort of. About potentially making a tiny profit through this temporary price difference. Essentially trying to capture that little bit of value from the price lag before Costco adjusts.
Right, taking advantage of that inefficiency. It's a form of arbitrage, like you said earlier, finding price differences in different markets, or in this case, a timing difference.
But the reports were quick to point out the risks, too.
Crucially, yes, Costco very clearly does not offer returns or price adjustments on gold purchases. Once you buy it, it's yours.
No buyer's remorse allowed.
Not on gold, no. And selling it quickly, especially if you need to, at a price you like, that can be challenging. Experienced collectors often recommend building relationships with local coin dealers or precious metal dealers if you intend to sell. It's not as simple as just clicking sell online.
So while there might be some people trying to, make a quick buck-sucking Costco gold.
The short-term flippers.
Yeah. It seems the majority of buyers mentioned in the sources, the ones driving this trend, are really thinking longer term.
That definitely seems to be the prevailing sentiment. There was that warehouse manager quoted in one report who put it very simply.
What did they say?
They said, basically, the price hasn't had much of an effect. The people who want it buy it.
So demand is fairly constant, regardless of these record highs.
It suggests a consistent underlying demand, likely driven more by that desire for a safe haven for security, rather than just short-term speculation on the price going up even further tomorrow.
Okay, that makes sense. So let's try to pull this all together. Recap. Gold prices have surged. Record levels this year.
Driven by a mix of things. Economic uncertainties, worries about inflation, recession.
A weakening U.S. dollar, and even significantly buying activity from central banks around the world.
And surprisingly, maybe counterintuitively, Costco has emerged as this significant channel for gold purchases.
Attracting buyers with their trusted brand name and those famously low markups.
Right. And importantly, this isn't just a story playing out in financial markets or for wealthy investors.
No, the rising gold prices are already starting to have a tangible impact on the cost of everyday items, like we saw with the jewelry example.
Precisely. Gold's traditional role as that safe haven is clearly being reinforced, maybe even amplified in the current environment.
And its accessibility through a mainstream retailer like Costco has definitely broadened its reach, hasn't it?
It seems so. We're seeing both these big institutions and regular individuals driven by maybe slightly different concerns, but ultimately all contributing to this increased demand for gold.
So here's something maybe leave our listeners thinking about. If gold really is acting as this kind of indicator, this barometer of economic unease, what might its continued climb suggest about what lies ahead?
That's the million-dollar question, isn't it? Or maybe the $3,500 announced question.
Right, and maybe thinking even broader. In a world where traditional markets are facing these kinds of challenges, what other, perhaps less conventional, safe havens might be worth exploring? Things beyond the usual suspects.
It makes you think about what other unexpected assets or strategies might gain traction if this level of uncertainty persists. What's the next Costco gold phenomenon?
Definitely food for thought, something to consider beyond the daily headlines.